Innovations, and in this video we are going to learn how to find out the key dates and days for a bond calculation, like how many days are passed since the last interest payment has been made and how many days are remaining for the next coupon payment, and the like dates, what was the last date when the next coupon was paid, and what will be last coupon was paid, and what will be the next date occurring in which the coupon will be paid, and how many coupon are left, and also the what is the accrued interest today in that bond, and what is the clean price, what is the dirty price. So clean price is actually the price of bond without adding the accrued interest, and if you add accrued interest to it, that will become the dirty price. So we have the data entry panel here. I have entered data for a bond. The bond was issued on 31st December 2023. That means yeah, and then the settlement date is 30th June 2026, and maturity date is 31st December uh, 2035, and the face value of the bond is 1000. Coupon rate is 8%. Annual This is an annual bond, and YTM is 8%. So and we can change it to 5%, because if both are same then it may confuse. Now key dates. So how many days are passed since the last payment has been made? So the formula for that is equal coupon days BS. Coupon days BS. It's here. And it's asking for the settlement date. Settlement date is B3. Maturity date is this. And then the frequency is annual. And then convention of days, that's 3. And that's it. So 181. So that means the last payment, the interest was paid 181 days ago. So how many days are left? You can just subtract this number from 365, or you may use a formula that is COUP days NC, and the rest of the things are same. The settlement date, maturity date, frequency is annual, and then day convention is 3. So 184. And if you add these two numbers, so you will get the coupon days, like, or you can just use another formula, that is COUP day only, and then the settlement date, maturity date, and frequency. And we discuss what are these: settlement date, maturity date. Settlement date means the date on which you are purchasing the bond, and maturity date is when it will mature, and issue date is when the bond was issued by the company. And frequency, we will select 1, day convention 3, so 365. That's actually the sum of these two. And then key dates: last coupon paid on. When was the last coupon paid? So the for this, the formula is COUP PCD. And then again the same thing, the settlement, then maturity, then frequency, and payment convention. So 46022. So now this is actually the number format in Excel. You have to convert this into date. So last coupon was paid on 2025, 31st December 2025. So after that, what will be the next coupon date? And for this, you use the formula COUP coupon next date NCD. Again, the arguments are same: the settlement, the maturity, and then the frequency, and then day convention. And we will change that to short date. So next coupon will be paid on 31st December 2026. Okay, now the number of coupons left, so that is COUPNUM, number of coupons left. Settlement date, maturity date, frequency, and day convention. So you may adjust the dates according to you, like the maturity. Let's change these dates. So let's suppose we are we are purchasing this bond today. So it will be just 30th December 2023, and the bond was issued 5 years back. So we can select, or let's select a day of June 30, 2000, and let's take 20. And then the maturity date is, oh, that's fine, 2035. And now you can see the rest of the things are changed. So since today is 30th December, so the next coupon will be paid tomorrow after one day. And the rest of the things you may see, to total 13 coupons are left, and so on. Okay, now the accrued interest, like how much interest is still to be paid. So that will be actually the face value, and then we will multiply that by the interest rate. Face value is here, and we multiply that by the coupon rate, and multiply that by the number of days, divided by 365, total number of days. So this is the uh, interest that is still accrued. So that's very simple, because since the whole year has passed, only one day is remaining, so you may see that is closely equal to 80. Now the clean price we know is the price without interest, so we can use the price function. And again the same thing, settlement date, maturity date, the rate, which is coupon rate, then the yield, which is 5%, then the redemption value, that is this one, and the frequency, and that's it. I forgot the basis, 3, and that's it. So this is the clean price, and if you add these two, means clean price plus accrued interest, that is the dirty price of the bond. So that's it for bond valuation. Hopefully you have learned a lot in this lecture series. So see you in next video. Thank you very much for now.